Committee with the first item on the agenda, which is apologies for absence. We have an apology from Mr Anthony Boyle and from Councillor Anrasi. Declarations of interest is number 2, and we don't have no declarations of interest. Number 3 is the minutes of the previous meeting, which you can find on page 5 to 10. Do you agree with these minutes? Thank you. Number 4 is Forfus Mazars Audit Strategy, which you can find on page 11 to 38. And it's the Forfus and Masons Audit Strategy Memorandum 2025-26. I'm going to pass over to Mike.
Thank you, Chair. The purpose of this report is to present to members Forfus Mazars Audit Strategy Memorandum, which outlines the auditor's approach to the auditing of the authority's 25-26 financial statements. Members are recommended to note the contents of the 25-26 Audit Strategy Memorandum, including the scope, approach and timeline for the audit of the authority's financial statements. The accountant team has now completed the final amendments to the draft statement of accounts, and these have been published on the authority's website and shared with Forfus Mazars in advance of the statutory deadline. During the year-end process, the accountant team undertook a comprehensive review of property, plant and equipment, meeting with all officers responsible for these assets, including the fleet manager, to assess the appropriateness of asset valuations and useful economic lives. This work, incorporating the latest HM Treasury guidance on the valuation of non-investment assets, as reflected in the CIPFA Code of Practice on Local Authority Accounting, has ensured that the authority's asset base is accurately reflected and aligned with its current operational use. In parallel, the financial accountant has developed revised fixed asset registers and supporting working papers. These enhancements strengthen the quality and robustness of the information underpinning the statement of accounts. Councillor Page raised a question prior to the meeting on property valuations and specifically whether valuations for insurance purposes are included. And to clarify, external audit is focused on areas like insurance cover that tends to sit more with internal audit or wider risk management. That said, I can confirm that the valuations carried out by our professional valuers are shared with insurers as part of the annual review process. The strategy memorandum is attached as Appendix A on pages 15 to 38, and Katie from Forfus Mazars is here today to present the audit strategy memorandum along with Lauren and to answer any questions members may have. Over to Katie. Thank you.
Thank you, Mike. Lauren's going to take you through the detail of this report, but there were just a couple of areas that I wanted to touch on before I hand over to her. Page 18 of your reporting pack sets out who your audit team are. Just to note that I am going to be rotating off this audit over the next couple of months, and Lauren's going to be taking it over from me. But your engagement partner continues to be Karen Murray, so there's no changes there. And the only other thing I wanted to touch on was page 19 of your reporting pack, so the expected timeline. We've commenced some of our initial planning work earlier this year, and we've got resource scheduled in from September to begin the main audit field work, with an aim to issue our opinion before the end of the year. Just a reminder that the national deadline for the authority to publish their audited accounts is the end of January 2027, so we should be well ahead of that. I'll leave it there, but hand over to Lauren to talk through the detail.
Thanks, Katie. So I'm going to take you through the rest of the report. So I'll start with section 3, which outlines our assessment of risk. So risk in a financial statements audit context refers to the risk that balances in your accounts are materially misstated, which means that the accounts don't give a true and fair view of the authority's financial position. So we assign 3 levels of risk across our audit: standard, enhanced and significant, based on the likelihood and the potential impact of any misstatement. So at this stage, we've identified 3 areas of significant risk, which are essentially those areas that we think are more susceptible to material misstatement. So I'm going to take you through each of these briefly. So first is management override of controls. So this is a mandatory significant risk on all audits. So it's a risk of fraud from management, given the fact that they're in a unique position to potentially manipulate the accounts. It's not a risk that we've identified specifically to yourselves. It's just a standard risk across all organisations, given the nature of management's position. So to address this risk, we're going to focus our work around the areas of kind of estimation and judgment that management make, where there's potential for more manipulation, and also your journal entries. And then moving on, so as in previous years, we've identified the defined benefit pension scheme and the valuation of property, plant and equipment as significant risks. So both of these are quite high value and complex areas of the accounts where management have to engage an expert, and there's a lot of judgment involved in that. So we're going to be looking at these as a significant risk and assessing the kind of estimations and judgments that are made in these areas. So one thing that Mike touched on to draw your attention to is that there has been a change in the way that your property, plant and equipment is valued this year under the code. So Appendix B sets it out in a little bit more detail, but essentially valuations will now be undertaken on a 5-year basis with indexation in the intervening years. So this change of approach will kind of alter our audit approach a little bit. So we'll be focusing more this year on the indices that management have applied and making sure that they're reasonable and that they're accurately applied in line with the code. We've also identified one enhanced risk for this year, which is IFRS 16. So this was implemented into the code in 24-25, and we did identify some errors in the implementation year. So given the large value and the complexity around particularly your PFI schemes, we've opted to have this as an enhanced risk for this year. So this will mean we'll apply additional scepticism in this area, but we don't quite think that it's a significant risk in the same way that your PPE and your pensions are. I can move on now to section 4. This sets out our basis of materiality. So at this stage, we've set your financial statement materiality at 3 million, which is based on 2% of gross expenditure from the 24-25 accounts. We do expect that there may be some slight changes to this figure now that we have received the draft accounts, but we'll provide an update to the committee if that happens. We also set a lower performance materiality and a trivial threshold, which are again based on percentages of your financial statement materiality, to address that risk that misstatements could become cumulatively material throughout the accounts. So we audit to this lower level and we'll report to you anything that we find over our trivial threshold or anything that we deem significant enough that you need to know regardless of triviality. Moving now to section 5, this shows our proposed fees for 25-26. So as you can see, there's been a slight increase in the core fee, which builds in a 2.8% inflationary increase. This is in line with the terms of the PSA contract. Section 6 sets out our continued independence. We don't have any matters to flag to you here. And then section 7 sets out our work on value for money. So at this stage, we have not identified any risks of significant weakness which we need to bring to members' attention. It is worthwhile mentioning that while the accounts deadline is January 2027, the value for money work should be reported by the end of November. We've already started having conversations with management regarding this work, and we don't anticipate there being any issue in us meeting the November deadline for our value for money work. So the rest of the report covers areas that we're required to report to you under the accounting standards, but I'm not going to go through them in any detail. I'll stop there, but I'm happy to take any questions on any section of the report if anyone has any.
Thanks for that, Casey. Anybody got any questions? Chris, are you happy with the answer to your question?
Thanks, Chair. Yes, I was, as Mike corrected me, really that's an internal audit issue. I was really wondering whether Sitford had changed its advice on it rather than challenging our external auditors on whether they should be doing it. So and the answer is no, and therefore it remains an internal audit thing. Can I go on just to make a comment? I think at the last meeting, we did talk about how IFRS 16 as a new issue had increased the workload and complexity, and asked about that, and I was pleased to get assurances on that, and now equally pleasing to see on page 22 a brief setting out of how you're going to respond to that, and obviously you'll keep us abreast of what's what you do find and how you're able to comply with IFRS 16, I'm sure. Thank you.
Thanks for that, Councillor Page. I have a question, and it's on fees on number 5 on page 10. And it's 25 to 26 is 110,733, and it's left at that at the bottom. Whereas if you look at 24 to 25, there was quite a lot of add-ons. I want to know, did we expect these add-ons? Did we have money put aside for them? And are we anticipating any add-ons 25, 26?
Thank you, Chair. In terms of the total add-ons for 24-25, we didn't expect the increase that we actually seen. We did foresee that there would be some additional charges. So in terms of the actual year-end process, we did receive quite considerable amounts of support from Forvis Mazars, and Katie and the team provided some support to the team. So I think it take it back to when we actually went through the statement of accounts, and remind members that at that time we did have a relatively new team working on the accounts. We were also suffering from some resource issues in terms of a couple of vacancies and some individuals off long-term sick. In terms of what the accounts then produced with the new accounting standards, very technical areas which Forvis Mazars supported us through, which ended up with the additional bill, and that actually come through to that. In terms of funding that, we were able to fund that through some of them vacancies and some of the additional income that the finance team had actually generated in the year. In terms of going forward, I think it says in the report, the authority has taken a lot of proactive steps to strengthen the statement of accounts this year and the supporting papers. And we don't foresee any additional costs this year. Thank you, Chair.
Thanks for that, Mike.
Is it all right if I just chip in on that?
Yes.
The only thing I was going to mention is just on the fees, just to remind members of the fee arrangement. So the authority have a third-party provider called PSAA who make sure that you have an auditor, essentially. So you're in contact with them and we're in contact with them. So they are responsible for setting that core audit work fee, which is the top one. Any additional fees, so things that come up in the year, as Mike sort of explained, we then have to go through a process with PSAA, and they sort of audit those additional fees and make sure, you know, they provide challenge on them, make sure that they're happy, that those fees are fair. So I just wanted to add that on as a sort of clarification for members.
Just to confirm that PSA do then get in touch with Midside Fire Service just to check and confirm their fees with us before we actually go through the payment of the bill.
Okay. So everybody's happy at the end of the day. Right. Thank you for that, Katie, Lauren and Mike. Recommendations are to consider the Forvis Mazars 2025-26 Audit Strategy Memorandum and the scope approach and the timeline of the authority's 2025-26 audit of financial statements. Can this be agreed? Agreed. Thank you. Number 5, Treasury Management 2025-26 Annual Report. This is on page 39 to page 50. I'm going to pass over to Mike.
Thank you, Chair. The purpose of this report is to advise members of the activities of the Treasury Management function and its actual performance against the agreed potential indicators in 25-26. Members are recommended to note the Treasury Management Annual Report. The authority approved the Treasury Management Strategy as part of the 25-26 Budget and Medium-Term Financial Plan in February 2025, setting parameters for borrowing, investment and risk management activities. Members have received regular updates on Treasury Management performance throughout the year via quarterly review reports and the interim Treasury Management report. This report now presents the out-term position for Treasury Management activities for 25-26. As set out on page 8, paragraph 8, on page 41 of the report, Treasury Management activity has been carried out in line with the approved strategy and within the borrowing and treasury management limits set by the authority. The Treasury Management Annual Report can be found on pages 44 to 50. In terms of key financial outcomes, no new borrowing was undertaken during the year, reflecting the current strategy of utilising cash balances rather than taking on new debt in a higher interest environment. Outstanding external debt remained unchanged at 33.7 million, and total interest paid on borrowing during the year was 1.7 million, in line with the approved budget. Investment activity increased significantly during the year. Investment balances rose from 47.7 million at the start of the year to 71.1 million at the year end. This increase was largely driven by the timing of grant income received in advance of expenditure, including 29.1 million in firefighter pension grant and 18 million relating to National Resilience funding. Investment income for the year totalled 1.8 million, which was 0.7 million above budget. The average rate of return achieved was 4.47%, outperforming the SONIA benchmark of 4.01%. In terms of prudential indicators and treasury limits, external borrowing remained well within the authorised limit of 66 million and the operational boundary of 61 million, with the level maintained of 33.7 million during the year. The authority remained under-borrowed relative to its capital financing requirement. All Treasury prudential indicators, including interest rate exposure and maturity structure limits, were fully complied with. No investments were made for periods longer than 365 days in line with the approved strategy. Treasury management practice remained fully compliant with the approved strategy and the relevant codes and statutes. Overall, Treasury management practices have been compliant with the approved strategy, the CIPFA code, and all the statutory requirements. Members are asked to note the report. Happy to take any questions, Chair.
Thanks, Mike. Has anybody got any questions? No questions. So can we go to recommendations on page 39, number 2? It's recommended that members note the Treasury Management Annual Report of 2025-26. This be noted. Thank you. Number 6 is 2025-26 Internal Audit Plan. You can find this on page 51 to 72. I'm going to pass over to Mike.
Thank you, Chair. The purpose of this report is to present to members the proposed internal audit plan for 26-27 and to seek members' comments and approval. Members are recommended to consider the proposed plan and approve it subject to any agreed amendments. The authority has a statutory duty under the Accounts and Audit Regulations 2015 to maintain an adequate and effective system of internal control, and this plan forms a key part of meeting that requirement. The plan has been developed by internal audit following consultation with the strategic leadership team, the Director of Finance and Procurement, the Head of Finance and other key officers, and is based on assessment of risk, previous audit findings and coordination with external audit activity. The plan comprising of 95 audit days and is structured into 2 main areas. Firstly, core financials, with 40 audit days allocated covering key areas such as payroll, accounts payable and receivable, treasury management, general ledger, budgetary control, medium-term financial planning and the capital programme. This work provides essential assurance over the authority's key financial controls and supports both the annual governance process and the external audit reliance. Secondly, a programme of strategic and risk-based reviews with a further 40 audit days focusing on key organisational risks, and these include workforce planning, capacity and organisational resilience, technology, governance, cyber security and ICT resilience, data protection, information governance and security compliance, asset management and maintenance assurance in relation to vehicles. Members should note that the inclusion of cybersecurity reflects the global internal audit standards, which introduce mandatory topical requirements for high-risk areas such as cyber resilience. The Internal Audit Service Charter is also attached as Appendix B and sets out the functions, mandate, independence and compliance with the global internal audit standards. Overall, the proposed plan is considered sufficient to enable the Head of Internal Audit to provide an annual opinion on the authority's governance, risk management and control environment. Members are asked to consider and approve the internal audit plan for 26-27. Happy to take any questions, Chair.
Thanks, Mike. Has anybody got any questions? Councillor Page.
Thanks, Chair. Question, Mike. Yeah. So thanks. Yes, you've gone quickly through the number of days allocated to each of those, all very important areas. There's also the contingency of 5 days, which is obviously good to see. If that gives flexibility to boost up time spent on all these important areas 1 to 4, or in effect, do those 5 days just get taken up by general advice and assistance over the years? Are they, in other words, I'm saying, are they genuinely available to be moved to support these other areas of activity, or are they just tend to be used up in a more general way?
So those are literally for a contingency. So whilst the plan is set and agreed by committee today, the plan could change throughout the year, and we would bring changes to that plan. Those 5 days are for anything that comes, not a contingency for the actual plan in place, but if anything new comes to the table. So other risks will come out throughout the year. We will use them towards those risks. If then we need additional days on top of that, I'll come back to committee with a report.
Thanks, Mike. Are you happy with that, Councillor Pitt?
Yeah, I'm certain that the very last part of that answer was the one I was really looking for, so thanks for that.
Anybody else got any questions? So can we go to the recommendations? So it's recommended that members A, consider the proposed internal audit plan for 2026-27 and approve the plan subject to agreed amendments. Can that be agreed? Thank you. Number 7. 2025-2026 annual year-end internal audit report and opinions. This can be found on page 73 to 88, and I'm going to pass over to Mike.
Thank you, Chair. I apologise for not picking up in the initial apologies, but the head of internal audit did send her apologies. She was hoping to actually make the audit committee, but because of the date change, she couldn't make. So she was going to present this report. I will present the report on her behalf. The purpose of this report is to present to members the annual internal audit report and overall audit conclusion, and members are recommended to note the contents of the report. Internal audit has completed this programme of work during the year, and as a result, the results are summarised within the report with a detailed breakdown on paragraph 7 on page 74. During 25-26, internal audit completed 8 audit reviews. The results of this work are positive. No significant issues were identified during the audit of the core financial systems, and sufficient assurance has been obtained that the controls in place are sound and operating effectively. These controls are being substantially adhered to, with a strong control environment continues to be maintained. Overall, the Chief Audit Executive has concluded that the authority has general sound system of governance, risk management and internal control, which is operating effectively in most areas and supports the achievement of its objectives. The overall audit opinion for 24-25 is substantial assurance, although some improvements are required in areas such as consistent control application and operational implementation of processes. The report also highlights a number of strengths, including strong financial governance, effective core systems, alongside some areas for further improvements, such as business continuity, asset control and documentation. Members are asked to note the annual internal audit report and conclusion for 25-26. Happy to take any questions, Chair.
Thank you, Mike. Does anybody have any questions? Councillor Mason.
Thank you, Chair. Just in terms of the 8 recommendations that remain outstanding, and particularly the one that's not even from last year, from previous years, could we have an outline of what they are, and particularly the longest outstanding one? What year is that from?
Yes, thank you, Councillor. So the longest one that's outstanding at the moment is we are waiting for an external policy review from King's Council. It's in relation to our grievance procedures. Originally, we were waiting for a HMI update. We received the HMI update, and we're still waiting for the review from King's Council.
I can just add a bit of further detail there. We have met with Council on a couple of occasions to go through several policies relating to this. We are looking to perhaps put more robust wording within the policy. So that's about 50% of the way. Whilst they all correlate to one another, we're just waiting for them all to come in before we bring back to members.
Councillor Makinson, are you happy with that answer? Anybody else got any questions? Councillor Page?
Thank you, Chair. On page 81 of the report, we talk about these key areas for improvement, and they're all important, I get that, but the one that really jumps out straight away is that first one, the business continuity and organisational resilience. I don't know if that's on the face of it, that is obviously of concern. I don't know how to quantify that, how much of an improvement we need, or whether it's tweaking, or whether it's more significant than that. If someone could let me know, please.
Yes, thank you, Councillor. A lot of the recommendations are around documentation, so a number of areas that have gone through change, so the Training and Development Academy moving to a new location needed to update their business continuity, business impact assessment, so that's been done. So a further recommendation was more around business continuity strategy states that business continuity plans are to be reviewed following the major exercises and major disruption. It's just making sure that that's actually in the document. So a lot of it was around things that we were doing, but we weren't actually putting into the documentation to say we were doing it. So it was more about making staff aware of what the requirements are, even though they were doing them.
You happy with that answer, Councillor Page?
Thank you.
Anybody else got any questions? I've got a question, Mike, that's also to do with 4.3 key areas of improvement. Mine is the second one, so it's segregation of duties, control and design. I'm under the impression that this was also mentioned last year as well, so can you just give us an update on what that actually means, and is it carried over from last year or is it different? Thank you.
So this is from an audit that's took place this year. So when we pick up on anything on segregation of duties, the recommendation is implemented straight away. And this was around the stores audit around stocks and officers requesting and approving personal uniform and items of equipment. And it was around the watch manager who approves for the rest of the watch, but there was an issue in the application where they could approve for their own equipment. The majority of the time, the request would go through to the station manager, and we've now implemented so they do go to the station manager.
Thanks a lot for that answer, and I'm happy to know that as soon as we get any improvements, we do them right away. Thank you. So thanks, Mike, and thanks, Ria, for your input there. We're going to go to, as nobody's got no more questions, we'll go to recommendations, which is on page 73, number 2. And it's a recommendation that members note the contents of the 2025-26 and annual internal audit report and conclusions. Is that agreed? Thank you. Number 8 is change to accounting policies, and this is on page 89 to 92, and Mike's going to take this as well.
Thank you, Chair. The purpose of this report is to present to members the accounting policy change that will apply to the 25-26 Statement of Accounts. Members are recommended to approve the accounting policy amendment. The key change relates to how the authority revalues its property, plant and equipment, specifically land and buildings. Under the current approach, the authority operates a rolling programme whereby approximately 20% of the assets are fully revalued each year, with the remainder subject to desktop revaluation. Under the updated requirements within the CIFA Code, from 25-26, all assets must be revalued at least once every 5 years, with annual indexation applied in the intervening years. Where a suitable index is not available, a desktop valuation may be undertaken, typically in year 3. The change is intended to simplify the valuation approach, improve consistency and comparability of asset values, and reduce the audit burden associated with annual revaluations. The change will be applied prospectively with no requirement to restate prior year figures. Members are asked to approve the accountant policy amendment for application in the 25-26 Statement of Accounts. Happy to take any questions, Chair.
Thanks, Mike. Anybody got any questions? I've got a question. It's on page 83 and it's on page 82 and it's to do with, if I'm reading that right, we now have a good standard, but we did have an outstanding. So I'd like to know how and why we lost our outstanding and how do we get it back?
Apologies, Chair. So the page 83 refers to the previous report.
Oh, sorry.
Happy to pass to the Deputy Chief Fire Officer for that.
Thanks, Chair. Thanks, councillors. So the question was previously on our previous HMI evaluation, we had 3 outstandings and we had out of 11 categories. We also had 3 adequates and the rest were good. On this report, our latest HMI inspection, we had 1 outstanding, we've got 1 adequate and the rest are good. The reason why we've lost the first outstanding is we went down from 11 categories to 10, and for us, the category that we had in terms of managing resources was removed on this inspection, so that's been joined up with another one, so that outstanding wasn't there to achieve anymore. In terms of prevention, which was the other way we went from outstanding to good, from our perspective, we pushed back quite hard on HMI around that, but their judgment is their judgment. We will do everything we possibly can. Let me ensure members and you, Chair, that we don't take that reduction lightly. We are a little bit at a loss as to why, because we've had the last 2 years, we've seen the lowest instances of fires in the home on record. We're doing some outstanding work, and as the authority know, we're probably one of the in the vanguard of community prevention across the UK. So we did take that quite hard, and I can promise you we will come back at that twice as hard next time. And we did push back HMI, and the Chief wrote to the lead HMI to ask for clarity on that as well, which we've discussed with the authority in other venues and other meetings. Coming back to the report, I don't want that to sound negative. That is a really, really solid report for me. And if you were to read that in conjunction with others, this is a new round of inspection. So the report criteria, as I said, has changed. So we are really pleased that some of our adequates have now moved to good. So it depends on the lens you look through. That is, we've moved 2 categories up a level. So members should be really reassured and assured that we're in a really strong place nationally. But yeah, in terms of losing the outstanding in prevention, yeah, we take that kind of personally, I would suggest, and we'll do everything we can to bring that back. But it's not for want of us seeking clarity on that. I think we do an outstanding job with prevention, as I'm sure you've heard over the last couple of years. So look, I'm happy to take any questions on that.
Thanks for that, Dave. I just wanted to say that the reason for my question was, I know how good we are at prevention. I know how many fires it stopped, how many lives it saved. I mean, also our training academy. And I just feel that maybe this report isn't fair. And I think I just wanted to voice my opinion and say I don't think it was fair that it hasn't been looked at continually looked at how we work. So we just wanted that noted. And I'm really sorry that I went back to the previous reports.
Can I just add? Just to add to that, the criteria as well from HMI is quite defined. So all the work that this authority does with youth engagement and so on isn't considered, or it is only considered marginally. So in terms of some of the things, another area that we are absolutely not graded on is all the work we do with national resilience, the work that we do with international search and rescue. We are absolutely in the middle of deploying the team to Venezuela now. We've got 10 members of staff. Our dog handler over there as part of that team is 68, which is coordinated from Merseyside. Unfortunately for ourselves, it doesn't fall into the assessment criteria for HMI, so there is a little bit frustrating. Some of the work we do isn't recognised.
Thanks, Dave. I just think we're outstanding anyway. So, Councillor Page.
if you'll indulge me as well on this, on the subject of the preventative work we do, and I've spoken to Ria and she's already on this subject as well. I think with Jed. Just to say, if you allow me to get this in as well, I'm on Sefton's Adult Social Care Committee, and heard from external advisors on protecting vulnerable people, and without me having to ask, the praise that this authority got for its work in our communities with our older people, and the additional work, that benefit that is to Sefton and all of our councils, is another hidden thing, which again we need. Well, certainly the local authorities are grateful, and the NHS is grateful for that work. So again, it's another aspect that if we're not, we must, I'm sure we do, but so I just want to take the opportunity of passing on that praise from external validators of the work that Sefton does, but more importantly, the contribution to the fire of service in that protecting older, vulnerable people. So thanks for listening.
Thanks for that, Councillor Page. Councillor Mekinson.
Thanks, Chair. Just back to the item. I'm struggling slightly to understand the material difference when we've previously reevaluated 20% of our portfolio every year, and now we have to revalue everything every 5 years. What has actually changed in reality?
So, Councillor, the only thing that's actually changed is how we do the valuation. So we still do 20% every 5 years. We now use an indexation factor as opposed to a desktop exercise.
You happy with that answer, Councillor Mekinson? Okay, so if we can move to the recommendations, which you'll find on page 89, number 2, and it's recommended that members approve the accounting policy amendments that will apply in 2025-26 statements of accounts. Can that be agreed? Agreed. Thank you. And we're going to move on to item 9, which is annual governance statement 2025-26, and this can be found on page 93 to 114, and I'm going to pass over to Ria for this one.
Thank you, Chair. Members will be aware that the authority must produce an annual governance statement each year detailing the arrangements and internal controls in place for effective governance. A review of the effectiveness was undertaken for 25-26 and has been reviewed in accordance with the SIPFA framework for delivering good governance in local government. The annual governance statement is contained in Appendix A of the report on pages 97 to 113 of the agenda pack. The statement focuses on the principles contained within the framework which relate to demonstrating strong commitment to ethical values and respecting the rule of law, ensuring openness and comprehensive stakeholder engagement, defining outcomes for economic, social and environmental benefits, defining the interventions necessary to optimise the achievement of the intended outcomes, developing the authority's capacity, including capability of its leadership, managing risk through strong internal control for financial management, and implementing good practice in transparency, reporting and audit. The details against each principle are contained within the appendix of how the authority has performed for 25-26. When considering the review of its effectiveness, the review's been informed by the work of internal audit and the head of internal audit's annual opinion, reports from external audit, oversight and challenge by members across the structure of the committees, including audit and scrutiny, the work of the strategic leadership team, performance management frameworks and risk monitoring, and the governance self-assessment, including our adherence to the National Fire Sector Standards. The Director of Finance and Procurement has confirmed that no significant weaknesses in compliance with these principles have been identified during 25-26. During the same period of time, the auditor's annual audit findings and audit letter, the authority received an unqualified opinion on the 24-25 financial statements, and myself as the monitoring officer are able to confirm that no actions were deemed ultra-virus during this period also. Whilst the authority's review of effectiveness for 25-26 has not identified any significant governance failings or issues that require formal disclosure, areas were identified in which an opportunity was presented where we could enhance existing arrangements. Those are to further embed a programme of project governance disciplines, particularly in relation to service improvement activity, ongoing development of risk management practices, and continued strengthening of performance reporting clarity, ensuring that outcomes, risk and resource implications are consistently integrated and clearly articulated for members. All of that work, I can assure members, is already underway through different people within SLT. The recommendation is that members approve the annual governance statement, and that will include for the statement to be signed by the Chair of Audit and the Chief Fire Officer. Happy to take any questions.
Any questions? So if there's no questions, can we approve that recommendation on page 93, number 2? Is that agreed? Thank you. As there are no other items on the agenda, I would like to close the agenda, but just remind everybody that our next meeting is on the 1st of October.
Can I just raise one thing, Chair? I know on item number 6, when the agenda was published, there was a typographical error. So in the title on the actual agenda, it states that the internal audit plan is for 25-26. The report itself correctly states 26-27. So if just members are agreeable, I'll ensure that for anybody looking back on the agenda, that we'll update it with the correct date.
Is that agreed? Thanks everybody for your attendance.
What was the date in October?